garden variety recession on 25, or I should say the garden variety financial crisis caused, a sharp decline in job growth in 2000, and as you can see, the decline there in 07. It started in 07, bottomed in 09, and as the economy began to recover, obviously the jobs came back. But we have just begun this transition for the restaurant industry and for food and service drinking places. And that also led, and I think probably the most important chart in this whole presentation from a macro perspective is on slide 26, and you can see the Knapp-Track same-store sales and traffic from 2002 to 2020 on the left, the same-store sales on the right is guest counts. And so this is, you can think of this as sort of a baseline decline if we're going into a recession anyway, which some may believe that we were. So baseline, we could have been looking at, an 8 to 10% decline in comps, and then now you're adding to that the change in consumer behavior because of COVID, or right now the shutdown of the economy in the United States, and in particular eating out, is layering on another 30, 40, 50, 60, 70% decline in comps, kind of depending on, where you sit within the industry. So this is one thing to keep in mind as we begin to see a recovery off the lows, is what the baseline trend will be given the unemployment rate, or where the unemployment rate is going, or how many people are losing their jobs. So, when we get back to sort of a baseline down 8 to 10%, then, we'll feel a little bit more confident that we're gaining steam and heading back in the right direction. And lastly, on slide 27, or not lastly, but importantly, if you look at the correlation again, Knapp-Track to the U.S. GDP, there's a 0.83, and again, we're just beginning this downturn in the economy, and what's reflected in the stocks is hard to know.